Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. So we're going to go ahead and get started with our analysis. Let me go ahead and grab the bias chart here. Okay, so let's go over to the euro. Gonna kind of get cooking this morning. Running a little late. Got busy chatting with Paul. Okay, so here's the euro dollar. Now the euro, as you guys can see, has been in just in a huge range. I'm still looking for, excuse me, gosh, I'm still looking for a move up towards 114.20. It looks like we're probably going to get that today with the dollar. So 114.20 seems very possible. Again, a move down here to 112.50 would be great. I don't think that's going to happen today. Still the same levels apply from the last couple of days. All right, really just look at the possibility of a move towards 114.20. I would actually be interested in shorting the euro up there. I've been kind of waiting for it all week. I had orders out there like on Sunday and Monday, and they never got hit. I don't have any orders open right now. Since I'm in front of the computer, but if we make it up to 114.20, I'd be interested because it is 114.16 is the 618 retracement. Let's go over to a 4-hour chart. Okay, so that one, you can see here's the low, the 114, if you will. That will be the 618 retracement. So let's see if we can get up there today. I think we got a good shot. Because it's been such a tight trading range overnight that if the euro just starts to trip some stops, it could. I mean, considering how strong gold and silver and even copper is this morning, I think that's entirely possible actually. Okay, silver. Oh, I got to show you guys silver. Hold on. Let me go over to the. We're in a range. The euro. Support comes down at 113.20 that we had written down yesterday. I think that's still very significant. And I think that I don't even know if we're going to get down there today, but 113.20 would be support for today. And I think, again, resistance 114.20, that is key. All right, I wanted to show you guys silver. This is a pretty outstanding chart yesterday. If you take a look at silver. Okay, so silver, what happened yesterday is we were sitting right here, and we moved right up to this, and you can't see the 4-hour chart now, but this trend line, we were right up against this 1650. And and I wrote out an alert yesterday. I'm like, if we can break through 1650.5, then we're going to get a squeeze here, and that's exactly what's happening in silver. So this is like just very much showing you what's happening in the precious metals. You got silver that's moving. You got gold that's up $10. You've got even copper that's up 1%. All right, which leads me to believe that the euro could make it up to that 114 and change. Now, the pound, let's go over to the pound dollar. The pound is going to be, the data that we've seen out of the cable, and even last night, we had manufacturing production numbers that were really strong, the industrial production numbers that were really strong, and the cable is a little firmer, but I think that's more on just overall dollar weakness. It's not because it's not because of the economic data. The economic data is being really just overlooked here in the cable, and it's very, very messy, obviously. And like yesterday, I mean, if you want to short the cable up here near 146, you can. I think the 146 to 143 is the bigger range that's in play. I'll just remove that for now. I'm going to just extend these lines out. Actually, let's delete that. Let me redraw that. Okay. So you have your 146 is still, in my opinion, pretty key resistance. It is the 618 is right here. We did overshoot it on that fat finger, trade yesterday, but, or yeah, it was yesterday, actually 2 days ago. But anyway, 146 is still going to continue to be really key resistance in my opinion. Support 147.70. Okay. $144.70. Going to be support. These are the same numbers as yesterday, I believe. All right, let's go into the Swissy. Now the Swissy, let's see. Here's the Swissy as we continue down towards that 95. My opinion is this 95 cent level is going to be a really, really key level support on the way back down. I'm not willing to play this to the long side, not ahead of the Brexit vote. There's just no sense in playing, and that's with the Swiss pairs in general. Like John asked me. Or James, excuse me, asked me, well, why would you play the pound Swiss? Well, if there is no Brexit, that means the cable's probably going to rally, and then the Swiss franc is going to get sold aggressively because no one needs Swiss francs if the UK is going to stay in the EU, right? So the pound Swiss would be a great long, and the dollar Swiss, in my opinion, would be a great long as well. Because right now the Swiss franc is in major demand ahead of the vote. Okay, and it's going to continue to be that way unless we get within a couple of days of the Brexit vote, and it looks like by some of the polls, it suggests that there is a good chance that the UK is going to stay in. Then you might see some Swiss, backing off. But right now, I think we're on our way towards 95 cents, in my opinion. And that's going to be, if you go, well, if the dollar Swiss is heading down towards 95 cents, what's that mean with, what's going to happen to the euro? Well, the euro doesn't have to go anywhere. We could have the euro Swiss, pushed down to, 108.50. At the same time, and that will keep the euro capped itself. So again, I think it more has to do with more has to do with the Swiss franc, not necessarily what's happening with the dollar. Okay, this is more just Swiss franc demand across the board. Today, if you're playing it on the short side, which makes sense, you're gonna start to find some support down here, I would think. Maybe 95.80 might find some support today. Okay. Any type of rally in the dollar Swiss, you probably want to use it as an opportunity to get on the short side. Now, you can see we're obviously very oversold here. Here's the 4-hour, extremely oversold. Where that takes us could be, maybe a little bit lower, and then maybe see some sort of bounce. But the bounces should be capped. I mean, any type of bounce back to 96. Because you can't try to figure out where a fib is from here because we don't know where the low is. So 96.80, and I'm actually going to put this bearish, and not because I don't think we're in a range, because if you look longer term, we are in a range, okay? But the reason why I'm going to put the dollar Swiss as being bearish is because I think the Swiss franc is in major demand right now, all right? And it's going to continue to be in major demand. So that means if you get a rally, like a little bit of a short squeeze, you know, for whatever reason, use it as an opportunity to be on the short side. Okay, but that's going to be bearish for probably the next week or two. I think that makes sense to me. All right, let's go to the dollar yen. Now the dollar yen, boy, I mean this thing has not got a lot of life. So here's the dollar yen. We are near the most recent lows, which come in at 106.50. 106.50 seem to be holding for now, but man, I don't know. Just looking at the dollar yen, I mean, it doesn't make sense to really be on the long side, especially if the market goes risk off. Then you're going to see, the yen coming into demand. But at the same time, while you're below this 108.20, there's no sense in being on the long side. So I'm going to put in 106, whatever that is. That's a low. 106.35, 108.20. I know it's a wide range, but whoops. And a lot like the Swiss franc, I think you gotta play this one with more of a bearish slant, just with the possibility of it being more risk off than anything. Okay. All right. Dollar Canadian. So the dollar Canadian, this thing has come under a lot of pressure. We're at the 127% extension right now. Now keep in mind that this is very, very right now moving. It's moving because of crude. It's very much a crude oil move. The IV PMI numbers yesterday were a disaster. They were horrible. All right, but it didn't matter for the Canadian because the Canadian is being driven by crude at this point. That flag pattern played out, so let me get rid of it. Okay, obviously from a relative strength perspective, we are very oversold. And when you get down to these, I don't even know if I'll have readings down here. There's one that's close. We got that oversold back here in September of last year on a 4-hour chart. Okay, and that produced a really wicked bounce. Keep that in mind, that we are that oversold, because if you go back and you look, let's go back to September, the RSI was basically at 15. So we're not quite there yet, but we're getting there. All right. Keep in mind that if we get much lower than that, you could probably see a wicked bounce. And like I said, the thing about wow, what's up with the pound? Pound's screaming right now. The thing about sorry, I'm paying attention to the pound in New Zealand. I'm trading the crosses, as you guys know. I'm long like the Euro New Zealand and the pound New Zealand that are holding up pretty well. Going back to what I was saying, the thing about the crude oil data today, everybody's expecting a pretty big draw because of the API data last night. All right, so because of that, we could very easily see crude reverse course if there's a big draw. People are expecting 3 million barrel draw, I think, is what the market's looking for. Hold on really quick. Yeah, 3.2 million barrel draw. So, if it's in that neighborhood, which based on the API data that we saw last night, it probably will be, then the market's going to look beyond that and say, okay, well, we got the draw, now what? So there is hold on really quick. So we're past the 161% extension move there. All right. We're closing in on the we're closing in on the 786 retracement here, which will be 126 and a quarter. From here, the 127% extension is right now, right where we're at, basically. That comes in right where we're currently at. So I'm going to say 126 and a quarter looks doable today. And resistance, will be right here, which is 127 and a quarter. So 127 and a quarter. And I'm going to put this in a range, and the reason why is, first of all, we're very oversold, but you have to kind of, take a step back and realize that, we've been down here before. This is not like uncharted territory. Okay. All right. When I come back, we're going to do the Kiwi, the Aussie, dollar index, everything else, and I'll be back in a few moments. Thanks. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. The pound is pushing up against 146. The crude oil market just hit new highs. Euro is just kind of slow grinding it. Same with the Kiwi and the Aussie. The Aussie just hit new highs too. The Canadian's pushing the lows, but really just kind of holding up at that 125.60 for now, or 126.60 for now. Kiwi new highs ahead of the RBNZ. Matter of fact, let's get to the Kiwi. So today the RBNZ meets, and as you this hold on, I gotta redraw this trend line because I don't know. This trend line might be actually it right here. Here, let me show you something. Remove that, and let me go back over here. So this, it's not going to work. So this Kiwi, go right to the tip there. We're trying to break out in the Kiwi, but this is ahead of the RBNZ. Now, the market's pretty split on where they feel, about the RBNZ decision. It was 2 weeks ago. The market was pretty convinced that the RBNZ was going to cut rates today, but now most of the market believes that, more than half believe that I think it's more than half. Last I read, there's only like 16 or 18 economists via Bloomberg that cover the RBNZ, and I want to say 8 or 10 of them believe that the RBNZ is going to stay on hold. Reason why is the real estate market. It's hot, so they don't want to. If they cut further, then it's going to continue to spur speculation in the housing market. But the flip side to that is, if they don't cut, then the Kiwi is going to continue to strengthen. Then they don't want the stronger Kiwi, because it's really taking a toll on the dairy industry. So it's kind of like the RBNZ is in a bit of a pickle. So today is going to be a really close call. So if they don't cut, probably what they'll do is they'll prep the market for an August cut. But you know, the flip side is they could cut today, and if they do, then the Kiwi, what you're seeing in the Kiwi, will reverse course pretty aggressively. And frankly, you know, I have some Kiwi shorts through the crosses, but not, you know, this Kiwi dollar is pretty damn strong at the moment. So key resistance right now here, actually, I was going to keep that, but is going to be 1850 or 1850. Sorry, 7050, 7050 right here. That's going to be the previous highs, which already had that double top extension. You know, we're just retesting those highs. That comes in at 7050. Okay, that's going to be key resistance today. Now let's just and we are in a range. We're just at the upper end of the range. Let's say that the RBNZ does cut. We would see 69 cents again, really fast. 69 cents is going to be support, but I think the 69.50 for today, that'll be pretty key support for intraday. Okay, 69, actually that's 69.60. Okay, and beyond that, by the way, is 69 cents. Okay, just keep that one just written down. All right, let's take a look at the Aussie. The Aussie is strong, but we're still struggling on this approach to this 75 cent level. 75 cent level is a 50% retracement. It is previous support from over here, way back in April. So 75 cents is going to be probably fairly key resistance today, and if we can break that, like I said, the move in silver and gold and copper, you know, suggests that we are going to at least make a run for the 75 cent level. So, and support is going to be back at 74. That resistance there, which is what's the high here? 73.65. Oh, I'm sorry, I'm looking at the wrong price. Yeah, 74 cents. So 74 cents is support. I think 75 cents is going to be pretty key on the way up. Okay, and we're in a range, but we've been in recovery mode, you know, for the last, you know, week and a half or whatever, ever since the NFP. So 75 cents will be probably fairly important for the Aussie. Now let's go over to the dollar index. So here's the dollar index, and we broke through that support, which we were looking at this bearish wedge yesterday. Okay, so we knew that was going to break lower, or at least we're pretty confident that was going to break lower, and it did. So now that means that 93.75 is resistance. Support, the 618, where is that 618? Hold on, let me go back out to a daily. That comes in at 93.50, and we've been as low today as 93.54. So 93.50 is going to be support. Okay, and I think we're in a range here. All right, let's go look at the peso. Now the peso, I picked it up yesterday, a real small position, and I got ran over. I was like, oh look, we're basing here, you know, and then I just got stopped out overnight. But I did buy it again this morning at 18.25. Just a small position. It's just really small. This we just overshot some, man, that's way oversold here. We overshot some support. Further support's going to come in horizontally at 1810, right there. It's also a 38% retracement of this of the whole move, so that comes in at 1810. That does look doable. Okay, now resistance is going to be any move back up towards 1835, which I thought was going to hold last night, but did not. So 1835 is going to be resistance on the way back up. Okay, we had been bullish here, but we're just going to put it in a range because of that pretty big rejection here for the last from the last couple of days. Hold on really quick. Let's just say that's a double top. Let's just call that the neckline roughly. And what I'm gonna do is I'm gonna take this entire range, but peso is a wild currency, extremely. Yeah, I was an overshoot on that that double top. Okay. Canadian's bouncing a little bit. Crude's pulling back slightly. Okay. Let's go over to the Norwegian krona. So here's the Norwegian krona. It's been hit alongside crude oil and the dollar. Okay. Like the Canadian, we had this inverted head and shoulder pattern. So we're basically testing the shoulder. But I don't know if I'd put much emphasis on this horizontal support. But that comes in at 808, basically just below where we're at. If you guys want to pick something up on the cheap here, I don't want to buy any more dollars, but for those of you that would want to, 8.08. This looks like pretty important support, and if crude's going to pull back, then maybe you want to get long here. Just some food for thought. Looks like a descending wedge to me. So that means resistance is going to be the spike high, whatever the highs are for today, which is basically 812. We're in a range here in the Norwegian krona, just a big range. And also keep in mind with the Norwegian krona, this is look at how bullish the longer term charts are. We're just approaching support here in a big range. Wow, the pound's really come off that 146 level. Dang, I did not short it. I'm not trading the cable right now, so look at that. We hit 146 and we came off 40 pips. Is that resistance? That's sticky. I'm going to put an asterisk here. Maybe some of you guys shorted that. If you did, good for you. So that reversed hard. Okay. Swedish krona. I haven't paid much attention to the Swedish krona. Wow, look at that spike up. Oh, that's just a 5-minute chart. Never mind. I haven't paid much attention to the Swedish krona. We are, God, look at how important the support is here. Look at the little probe lower and then bounce. I'm going to write down support as being 810 here. That's tempting, but basically we're on support. Well, actually, actually, I don't know how important that support is. I'm just going to write down 810. Resistance. You have a spike high over here. You got a spike high right here. So I'm going to call that 815. Like the euro, some pretty tight ranges in these Nordic currencies too. Okay, man, that hold on really fast. So here's the dollar. Let's go over to the hourly charts in the dollar. Keep your eye on the dollar here. And we still have a couple hours left in this bar, but that's a pretty wicked bounce. Okay, your bias chart's done. Let me go ahead and grab it for you. There's your bias chart. It is finished. And it takes some of your questions. All right. Thomas.